Good morning, everybody. Hey, I hope you're doing well today. It's good to see you guys today. I hope you're having a great week, finishing up all that holiday shopping and getting ready for the Christmas season. Hey, Dave will be with us here in just a few minutes. We got a few things to talk about today as we get ready to start. Yesterday was a green day on Wall Street. Dave will be with us here and we'll talk about what's happening.
Oh, 5.7 Light FM. Hosers are everywhere these times of year. It's 8:37, 23 here before 9. I'm Dave, and it's time to check in on your money and find out what's going on Wall Street. Good gosh, another record day for all three of the major indexes. Let's see if we can keep it going and head downtown to the offices of Statler Financial Services. Phillip Statler's on the line this morning. Phillip, how you doing?
Hey, I'm doing well today, Dave. It's man, the 17th. We're halfway through, more than halfway through December, and we'll be in 2020 before you and I blink an eye.
1 week and 2 days till Christmas Day. This fourth quarter is going by so fast it feels like a bad meal from Taco Bell. I can't believe how fast it's going so far this year. Let's see here. Good news in the housing market. What gives? The world is upside down. We had two pleasant surprises today, didn't we?
We did, both on housing starts and permits. Both beat what was expected. And a matter of fact, housing starts, along with the permits, hit a 12-and-a-half-year high. So good news there on the housing front as we continue to see that sector move up. And it was better than what it was last month, too. So that's an incremental increase, which is good.
Absolutely. We're almost getting used to the notion of getting negative news on the housing market because that's been the sector of the economy that I dread every time I see it on the schedule because it's normally been not such hot news. It's kind of nice to actually be able to say a new high for a period of time too, isn't it?
Yeah, it is. It's good to see housing seem to be picking back up a little bit. We'll see how that continues to move forward. One of the things I did see, kind of a tidbit, was that this fourth quarter is definitely being helped by what they're calling QE4.
Mm-hmm.
Where they lowered the interest rates. So quantitative easing is getting a lot of the blame or not blame for this increase in the markets right now.
Yeah, that and a whole bunch of bond buybacks too at the Federal Reserve. It's kind of making money a little bit easier, and that makes buying a little bit easier for the companies. We're even without the interest rates, all the bond buybacks are making money a lot more liquid around the country.
Yeah, absolutely.
Absolutely. Speaking of good news, bad news, we talked about good news on the housing starts, bad news. I noticed this morning that Boeing was falling like a rock and tanking again. And one of the questions I had before we went on the air is what caused that? And you found that bit of news. The 737 ain't going to be the 737 anymore.
Well, they're not doing away with it, Dave. They're just going to suspend production. And I think it's kind of twofold from what I was looking at today. One is they're spending a lot to build those airplanes and jets and have them sitting there and nobody taking delivery.
Mm-hmm.
So that they're feeling is not a good use of their cash right now until the FAA clears them and they can start pushing these out to the airlines. So that's number one. Number two, they're doing what they can to keep people working. So they said this will not affect any of the employees. They've got other stuff, I guess, in production too, that will be able to take these employees and work on that. But even with this suspension, they're talking about they're blowing through $1 billion a month in cash.
Good heavens. Yeah, it needs to be said, Boeing has a whole boatload of other things going on. The 737 MAX is just the item on their inventory that has its head above the foxhole. They're also a substantial military contractor, but that 737 has been an absolute disaster for them, and it wouldn't surprise me a bit if something gets reintroduced as the 738 or something before too terribly long, because I think that name is probably poison right now for a PR standpoint.
Well, that's true, and they ended up yesterday down a little over well, not quite 4.5%. They're down again another 1.2% this morning.
I was looking at the fact they've lost something like 35% of their value over the last year. They had a peak around about a year ago close to $450 a share, and they're down by over $100 a share right now.
Yeah, you're right. They're getting really close. I say close in terms of they're probably 10% away maybe from their 52-week low, which was like $292. Right now they're at 323. So yeah, they're getting really pretty close to that 52-week low.
If one happens to be a counterintuitive investor, I think one would say that's a buying opportunity because they got an awful lot going on and they're getting probably disproportionately penalized for that 737 disaster. I got to assume the company's going to come back with all the other irons in the fire, but it's not a pleasant time to be a Boeing stockholder, is it?
No, it's really not. It's kind of painful right now, and so you just have to wonder how much longer it's going to take to get this issue resolved and move forward and get past it. You know, that's going to be key for Boeing.
Oh, absolutely. Something I noticed, but we mentioned when we were before we went on the air this morning, and probably a good indication of the status of the world today and how much things are trading on overseas influences and trade rumors and trade facts. It's been a few weeks now. Whenever we have a good bullish day on Wall Street, and it should be noted again, all three of the major indexes set new records yesterday. They set it long before we end up closing for the day. There's always a tail downward. It looks like some of the smart money is not 100% confident that they can leave it on the table while the markets are closed and kind of taking it off the table for the overnight hours because all the news seems to happen on China time. We had another record in the Dow and the NASDAQ and the S&P yesterday, and then we tailed offward by a half a percent or so right at the end of the day. It's starting to become a trend where we really don't trust what could go on after the money stops getting thrown around during the day, doesn't it?
Well, I think you're right. I think the traders out there that are trading their stocks, they don't want to get stuck in the market overnight. They want to be able to look and see what's happening and be able to react. And obviously, they can't do that once the market's closed and the futures start. So I think that's what you're seeing there in terms of hitting new records and then tailing off at the end. The traders don't want to be caught in the market when it closes.
Absolutely. Speaking of being in the market, we have a couple of reports this morning. The household names are pretty well gone, but a couple things of import that came out in terms of quarterly reports.
Yeah, we did. We have Navistar, which is a big truck maker, make semis and that type of thing. They came in ahead of estimates by about 6 cents a share on their earnings per share. Revenue, though, was below the forecast. Been hurt by lower industry demand, just not a big demand right now, given that the economy is kind of slowing down a little bit. And so they're seeing some issues there. They're down almost 4.5% this morning before we. I'm sorry?
That kind of squares. I was going to say that kind of squares a little bit with the not encouraging capital goods numbers that we got earlier in the month too, doesn't it?
That's right. So markets or companies are kind of holding on to cash as much as they can because they're just afraid that things are slowing down and they don't want to get caught short.
Mm-hmm.
The other one I had was J-Bell Circuit. They're based out of Tampa, technology company. They did beat. I don't have the exact numbers. I just saw they beat on earnings per share and revenue, and I believe I saw they even got a rating increase by some of the brokerage firms.
Understood. I did see they were heading toward a 52-week high off of that as well. Neither one of us saw the actual numbers involved. Resetting the table for the morning yesterday was another record close on the Dow, the NASDAQ, and the S&P. Dow up 100 points. NASDAQ was up a little over 79. Standard & Poor's up by 22 and 2/3 yesterday. So we ended up between a third and 0.9% up on the major indexes. New records on all three. We're going to be able to keep that going 45 minutes before we start trading this morning, Phillip?
Well, Dave, let me just say that we just saw a change from red to green on the Dow. So it's right there at that break point. 1 second it's green, 1 second it's red. So it's basically break even right now. But we've got the S&P 500 and the NASDAQ both up 0.1% or less, but they're green. And so we'll have to see how that shakes out as this market opens up this morning. And then on the commodity side, gold and silver. Gold's up about 0.25%. Silver's up 0.1%. Silver did finally get back over 17. It's at $17.12 an ounce right now. Gold's still below 1,500 an ounce. And crude oil is doing what we don't like it to do. It's heading up about 0.5% this morning. It's at $60.41 a barrel.
Yeah, it seems to me that's a couple of dimes more than it was yesterday too at this time, which none of which is good news for the gas pumps, is it?
No, really not. And we're seeing it. We're seeing it move up over that 250 to towards 260 a gallon right now.
No, yeah. Overseas markets, green ink across the board in Asia when they closed early this morning. Yesterday, Europe had a little bit of a buying festival going on, so they're off by a little bit this morning. A large bit of that is profit taking in all probability. Phillip, somebody need advice to be able to find out how to make retirement fruitful for you and your family. Up market, down market. The idea is to minimize the risk involved. How do I find you on the phone?
Dave, as folks get ready to retire, 5 years out's when they need to really start analyzing their portfolios to make sure they don't have too much risk. That's one of the reasons we offer our financial x-ray review. All you have to do is give us a call at 382-0037 to schedule your review. And then check out our website at statlerfinancial.com, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And back here tomorrow morning, same time on Light FM. Phillip, thank you so much. We'll catch you then, all right?
All right, man. You have a great one.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, I want to thank you for joining us today as we kind of head out in this holiday season. Hey, we'll be back tomorrow. I hope you'll catch us then. Take care.